Ladies and gentlemen, good day and welcome to Welspun Living Q4 FY2024 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Biplav from Antique Stock Broking. Thank you and over to you, sir.
Thank you, Steve. Good afternoon, everyone, and welcome to the Q4 FY24 earnings call of Welspun Living Limited, hosted by Antique Stock Broking. Today we have with us the management of the company, represented by Ms. Deepali Goenka, Managing Director and CEO, Mr. Sanjay Gupta, CFO, and Mr. Salil Bawa, Head Group IR. Without further ado, let me hand over the call to Ms. Goenka. Over to you, ma'am.
Good afternoon, everyone, and it is indeed a pleasure having you joining us today for highlights for Q4 FY24. I would like to share some highlights of operating performance as well as some achievements during the quarter under review, after which Sanjay will share the highlights from our financial matrix. At Welspun, we achieve excellence in every sphere of activities that we take on. In this direction, we are pleased to share that Welspun Living has been recognized and certified as a great place to work by GPTW Certification Agency, and we have fared among the top 100 companies in India in all the parameters. Welspun also saw one of the highest participation of employees among the corporates during the certification. We are also glad to inform that in Dow Jones Sustainability Index, DJSI ratings done for 23-24, WLL has secured a score of 66, which puts us among the top 3 percentile of the home textile companies globally. It reiterates the focus the company has in being a responsible and sustainable corporate in all spheres of its activities. Exports of all our products globally, as well as a reach in India, has seen a definite uptick and tremendous growth due to our unwavering commitment in providing unparalleled quality, both in products as well as in services, which has helped us achieve our highest annual exports, growing by 23% in FY24. It is with great pleasure that I would like to inform you that the company has clocked its highest ever quarterly revenue of 2,617 crores in Q4 and its highest ever annual revenues of 9,825 crores, approximately $1.2 billion, growing by 19% in Q4 and 20% in FY24. All our businesses have contributed in this tremendous performance in global markets as well as in India, taking us closer to a vision of Har Ghar Se Har Dil Tak Welspun. We have continued to have sustained EBITDA, achieving 400 crores, clocking 15.3% in Q4, growing at 25% year-on-year. ROCE has also improved substantially to 14.6% from 5.7% last year. Domestic. India continues to shine with an expected GDP growth of 8% in Q4, and inflation in March 24 is expected to ease to 4.8%, lowest in last 6 months. The retail sector demand, however, remained muted during Q4 through Jan to March 2024, mainly due to lower consumer spending, especially in discretionary categories. Our domestic retail business showed a lot of resilience despite subdued operation conditions in consumer markets in India, which continue to subsist in Q4 as well. Our domestic business continued its upward trajectory with a 12% year-on-year growth in Q4, closing at its highest annual revenues of 571 crores, growing by 4% in FY24, despite the challenging market conditions. Brand Welspun continues to strengthen its leadership position and is the mostly widely distributed home textile brand in the country, with presence in 600 plus towns and 20,282 plus outlets, up by 3,276 in Q4 alone, and plus 9,112 in FY24. Highest ever reach achieved by any home textile players in India. Brand recall for Spaces and Welspun has jumped substantially to 80% from 72%, and 50% from 40% respectively for our target audience, thereby leading in premium and mass home textile category. Brand Welspun growth has witnessed a healthy 15% Y-on-Y growth in Q4 and has grown to become a 200 crore brand in FY24. Brand Spaces has outgrown the category in modern trade channel, emerging as a leading brand within the category and gaining the market share. We have solidified a presence with 6 EBOs, 4 added in Q4, leading to a total of 26 EBOs on a journey to reach 150 plus EBOs by FY27. The home textile consumer business continued investment in marketing to the tune of 10%. We remain committed to continued investment in our brand for improving brand visibility and salience, as well as a focus to build profitable business growth in the domestic consumer business. Core exports. U.S. retail sales continued the upward trend sequentially on month-to-month basis in February 24 and March 24, growing by 0.9% and 0.7% respectively, leading to strong buying by retailers. India continues to be the leading supplier of terry towels and bed sheets in the United States of America, and as per the OTEXA data, India strengthened its market share in exports to USA for the April 2023 to Feb 2024 period, both in TT from 42% to 43% and bed sheets from 50% to 59%. In value terms, though the overall export to US during this period saw a degrowth of 11% and 9% in TT and bed sheets due to input cost rationalizations during FY24, WLL, however, witnessed a growth of 11% and 40+% respectively, solidifying our leadership in US exports further. Q4 also witnessed impacts on global trade and commerce due to the Red Sea issues, which has not only increased the voyage time to Europe and US East Coast from India, but has also resulted in hardening of the container prices. With our major distribution presence in US, we have been able to ensure minimum disruption in revenue. At the same time, our long-term relations with liners has seen us in good stead, leading us not to be too negatively impacted in costs as well. We continue to keep a close watch on this dynamic situation to ensure minimum disruption to the revenues and costs in the next financial year. Emerging businesses. Our emerging business of domestic consumer business, global brands, advanced textiles, and flooring businesses grew 26% in Q4 and 16% in FY24 and continue to contribute 33% of the total revenues of the company, up from 26% in 2022. Our licensed brands like Martha Stewart, Creative Collab, and Disney continue its growth journey and has given us an edge in US and European markets by not only opening up additional shelf space with our key retailers, but also in creating newer avenues. All our active licensed brands are growing at 40% in FY24. Our own brands have also made good headway in global markets. Christie in UK, which has the reputation of being the inventor of teddy towels, being the first towel for the Queen of England since 1857, which supplies the enviable Wimbledon towels, has rechristened the brand look, feel and ethos, connecting more with its key target audience and increasing its footprint with more D2C initiatives across UK, US, Middle East and Asia Pac regions. Christie has grown by 21% in FY24 and has a plan to grow at a CAGR of 29% in UK and other geographies to reach more than £50 million by 2027 with a sustainable profit. Well Home Our own consumer brand in the United States of America, both in online and offline, has taken off substantially with a growth of more than 100% in FY24. Overall, our global brands business has touched a revenue of $140 million in FY24, growing by 7% Y-on-Y and contributing 13% of total revenue. Flooring. Flooring business continued to grow, reaching its highest ever annual revenue of 927 crores in FY24, growing by 31% Y-on-Y. We are getting good traction in Australia, New Zealand and Middle East markets for both wall-to-wall and carpet tile. US continues to be upbeat in wall-to-wall and carpet tile, and we look forward to a good start in Q1 FY25 for soft flooring. High transit time and lack of vessels due to Red Sea situation created some roadblocks in Q4 in bringing in volume, especially in hard SPC. However, we have started getting good order projections for our regular SPC tiles as well as value-added products from large retailers and big-ticket distributors in USA, as well as with a clear line of sight from Q1 FY25. Quarterly revenues, hence, were slightly muted at 213 crores in Q4, growing by 2%. Flooring business, however, continues to be in high single-digit EBITDA, reaching 8.6% in Q4 and 8.3% FY24. On domestic market front, we continue to see growth in hospitality and residential segments in all our key markets in India. Domestic flooring achieved its highest quarterly revenues, growing 41%, and yearly revenues growing 15%. In order to capitalize on market opportunities, we continue our work on making inputs and entire value chain more and more indigenized. Overall, our flooring plants reached a capacity utilization of 52% during the quarter and 56% during the year. The advanced textile business witnessed a 23% growth Y-on-Y in Q4 and 31% in FY24 to clock a revenue of 521 crores, despite the ongoing challenges due to Red Sea. Full year capacity utilization of our Telangana spunlace facility reached 53%. Our spunlace sales continue to be strong on all our key global markets. In wet wipes, we have developed newer products for marquee customers, including Welspun Dew Aloe Vera Wipes for institutional market and bagging new orders from a leading baby care brand. More and more focus globally is moving towards ESG practices of the corporate across the world, and the companies are continually being evaluated on the basis of their sustainable and governance practices. Welspun is at its forefront of the same, and we have become a beacon when it comes to doing businesses responsibly and sustainably. This was further corroborated by the latest rating from Dow Jones Sustainability Index at a score of 66, as already mentioned. We have invested a 30-megawatt solar plant in Anjar facility with a view of achieving a renewable energy target, and we are glad to share the same has become operational, which would meet about 15% of the power requirements at our Anjar facility. Overall, the global economic sentiment still seems to be muted, largely due to continuing skirmishes in Russia, Ukraine, Israel, Palestine, and now Iran, with trade being impacted due to Red Sea issues. In USA, one of our key markets, although inflation rates have receded from their peak in June 2022, it has inched higher in March to 3.5%, and prices remain significantly higher than pre-pandemic levels across various sectors. In view of the same, the expectation of the Fed rate cuts in 2024 might get pushed, and a fewer rate cuts now expected. Through stellar performance in all our businesses, core as well as emerging, we have been able to get a much higher than expected 20% growth in revenues in FY24. We would continue to see growth. However, considering the current economic instability, we continue to be cautiously optimistic of the operating performances in FY25. With this, I would like to hand over to Sanjay, who will take over the financial highlights.
Thank you, Deepali, and greetings everyone. I will give a brief overview of the financial numbers for quarter 4 before we open for question and answer. We had informed that the board had approved a scheme of amalgamation between various wholly owned subsidiaries with Welspun Living in its meeting held on July 23, 2023. The Honorable National Company Law Tribunal, LCLT Hyderabad Bench and LCLT Ahmedabad Bench have filed their orders dated March 12 and April 9, 24 respectively, have sanctioned the said scheme. The effect of the said scheme has been given in the accounts with effect from appointed date, which was 1st of April 2023. During quarter 4 of financial year 24, we reported revenues of 2,617 crores, up 19% year-on-year, and for the financial year 24, revenues is at 9,825 crores, up by 20%. EBITDA margins for the quarter 4 stood at 400 crores, that is 15.3%, up 25% year-on-year, that is 71 basis points. For financial year 24, EBITDA is at 1,515 crores at 15.4% margin, up by 73% year-on-year, that is 478 basis points. Profit after tax after minority interest for the quarter is at 146 crores, vis-a-vis 125 crores year-on-year, growing by 16% year-on-year. For financial year 24, PAT is at 681 crores versus 199 crores for financial year 23, up by more than 3.4 times. Pursuant to the scheme of amalgamation and further reassessment of deferred cost assets of subsidiaries, the company has accounted for changes in current tax charges and deferred tax charges, thereby resulting into an effective tax rate of about 30% for financial year 24. Consolidated current tax charge impact is 12.5% for financial year 25. This deferred tax charge is one-off adjustment, and for financial year 25, we estimate our consolidated effective tax rate to be around 26 to 27%. Consequently, our consolidated EPS for quarter 4 stood at 1 rupee 52 paisa per share as compared to 1 rupee 28 paisa per share for quarter 4 of 23. For financial year 24, our EPS is at 7.06 as compared to 2.202 previous year. On the forex front, our average exchange realization for the US dollar during quarter 4 was 83.58 rupees compared to 83.8 in the corresponding quarter last year. For the full year financial year 24, it was 83.28 compared to 79.25 in financial year 23. Net debt stood slightly higher than our guidance at about 1,354 crores as at March 24, which is still lower by 180 crores from 1,534 crores reported a year ago. Due to increased working capital, including inventory of inputs, including cotton and finished goods at the end of financial 24, we saw our working capital slightly higher. Coming to segmental results, quarter 4 of financial year 24 core business of home textile revenue stood at 2,422 crores versus 2,017 crores in quarter 4, up by 20.1% year-on-year. For financial year 24, revenues of core business stood at 99,063 crores, up by 18.7% year-on-year. Quarter 4 EBITDA of home textile stood at 364 crores at 15% as compared to 14.5% last year. For financial year 24, EBITDA for home textiles stood at 1,383 crores at 15.3%, up by 480 basis points year-on-year. During quarter 4 of 24, revenues from flooring business was 213 crores, up by 2.2% year-on-year. EBITDA was at 18 crores, that is 8.6% as compared to 4.2% year-on-year. For financial year 24, flooring revenues was at 927 crores, up by 31%, and EBITDA was at 77 crores at a margin of 8.3%, up by 569 basis points. In financial year 24, we spent 275 crores towards CAPEX, majorly towards setup of 30 megawatt solar power plant at our Anjar facility, which has now been commissioned. While the board will be considering further distribution in subsequent meetings, the board during its meeting held today on 25th April 24 has proposed a 10% dividend for financial year 24, subject to approval in the annual general meeting. Moving on to guidance for financial year 25, on the back of a strong performance of 20% growth in financial year 24, and our investment in new complementary products of fashion towels and pillows and proposed increased capacity utilization, the company is well set to achieve a further top-line growth of 11 to 12% in financial year 25. Continuing from our sustainable EBITDA of 15.4% in financial year 24, with our continued drive towards cost optimization and improved efficiency, we believe we should be able to achieve annual EBITDA margin of 15 to 15.5% in financial year 25, growing by about 10 to 12%. We had earlier informed on our capex investment of 326 crore for a brownfield project in terry towel expansion in Anjar and 104 crore for a new pillow facility at Ohio, USA, and a 40 crore investment for transmission line for the new renewable energy facility being set up at Gujarat in our Q3 call. In addition to above, we would be spending additional 15 crore in terry towel project and an additional 35 crore on transmission line during financial year 25. Apart from this 520 crore of capex in new facilities, the company is expected to spend another 340 crore for balancing equipment, modernization of existing equipment, and maintenance capex in order to get higher productivity and output from existing facilities in all its manufacturing locations, totaling to 860 crore of capex for financial year 25. With the set capex plan and our stated objective of distributing at least 25% of that to our shareholders, we should be able to be within the net debt achievement, same as financial year 24, that is 1350 to 1400 crore. We continue to remain focused on our strategic priorities and growth pillars, with emphasis on our long-term goal of sustainable growth and profitability while deleveraging our balance sheet. With this, I will leave the floor open for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Prerna Jhunjhunwala from Elara Capital. Please go ahead.
Prerna, sorry, you are not audible.
Hi, am I audible now?
Yes.
Yeah, sorry. Congratulations on this set of numbers. Just wanted to understand the flooring growth rate of 2.2% this quarter, which is quite low as compared to our expectations. So, what happened and how this will pan out over the next few quarters?
So, hi Prerna. So we basically have our, if you look at it, flooring business has actually clocked its highest revenue of around 927 crores this year. We've grown by 31%. But the thing here is that in the last quarter, because of the Red Sea issue, there were a little hiccups. You know, because see, in home textiles, around 80% of our businesses are FOB. Here, we are looking at CIS. And that is again, that was the impact here. However, as we go forward in Q1, our numbers look very intact, and we are, moving in the right manner in a committed way that we have committed on the top line and the numbers and a strategy that we are looking at. So this was a little hiccup that we saw in this Q4 because this was right at its peak of the Red Sea issue.
Okay. So what kind of growth rate we can expect for the full year? I'm not getting into quarters because there can be some ups and downs there as well. But
Hi, Prerna. So we have given a total overall growth of about 10 to 12% for the business. So whatever has been the breakup this year, you can consider the same kind of breakup for next year.
Okay, understood. And in the domestic market, in the flooring business, what how is the traction going apart from the export market? So what is happening in the domestic market in the flooring business? I want to understand that as well.
Yeah. That's very, very important because that's going to be a growth forward. So domestic front, we continue to see growth in hospitality and residential segments in the key markets in India. So domestic flooring actually achieved its highest quarterly revenues, growing 41%, and yearly revenues growing 15% here. So I think I can tell you that India will be the key market, though it is a steady state growth that we are going to be seeing here. And this quarter we actually, to your point, actually clocked the highest revenue for the domestic market, and it will be going bigger as we also capture the residential properties as well. We have reached around 2,500 AIDs as of now, and that will again be growing 100% by the end of this year.
Okay. The second question is on cotton inventory. What kind of cotton inventory are you holding now at the end of the year? And do you think cotton prices can move back to 55,000 or above 65,000? Just trying to understand what should be the direction in your opinion.
So that's a valid point, Prerna. So first of all, we actually are covered until the beginning of the next cotton season. We are holding around 6 months of cotton till October 24. And as we look at cotton today, cotton prices look in the range of around 59,000 to 62,000 per candy. And as we are seeing the harvesting season being over, we'll see a little hike coming in the end of June and July. But as the season comes in for cotton, it will mobilize. We feel that the cotton prices will remain around 59 to 60,000.
Okay, and our cost of cotton inventory should be lower than that or above that?
Our cost will be around 59.
Okay, it will be around that only. Okay.
Yes, Prerna.
Okay, thank you, ma'am. All the best.
And thank you, Prerna. Thank you.
Thank you. The next question is from the line of Tanan Bagrodia from ASK. Please go ahead.
Hi, ma'am. Just a quick question from my side. If the US FTA would be signed, what would be the impact on our company? Hello?
Sorry to interrupt. The management line has got disconnected. Please stay on the line while we get them reconnected. Thank you for patiently waiting. We have the management line back on the call. Thank you.
Hello.
Hi, Dhanan.
Hi.
Hi.
So just, sorry, I'll just repeat the question. Just if the US FTA the UK FTA were to be signed, what would be the impact on our company in terms of numbers, quantifiable?
Thanks, Dhanan. So, we are already present in UK, as you are aware, with our own company and distribution capability, and we are supplying in the top of the better and the best category to UK already. UK constitutes about 9% of the entire world share, and our business share is also about 9 to 10%. So
I'll just say here something that as Sanjay pointed out, we are in the better and the best already in the towels. The upside that we will see with the FTA comes in is with the bedding, where Pakistan and Bangladesh dominate. So that definitely will be an interesting place to see, because right now we are playing in the better and the best, even in the bedding as well. And that is where I think we will be looking at a market share, because UK is definitely the second largest consumption economy after United States of America.
Okay. It's tough to quantify right now, basically, right?
Yeah?
It would be tough to quantify such. It's very hard to quantify.
No.
Yes, we cannot quantify at the moment because it's you know, it depends on even the businesses opening up according to the demand. So, you know, it will be as in wait and watch when these things happen.
Okay, sure. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Vikas Jain from Eurekis. Please go ahead.
Yes, thank you for the opportunity. Congrats for this set of numbers. The first question is the gross margin side. I believe the cotton prices have relatively been on the stable side. So could you elaborate what would be the reason for a quarter-on-quarter dip in the gross margins?
Yes. Thanks, Vikas. So as you can see, we, the sales in every quarter, the mix changes. And so this time the mix has been such that has impacted the overall gross margin by about 1%. But overall, our EBITDA margin has remained intact. So this dip, mix changes keep on happening on quarter to quarter, and but overall margin we maintain.
Oh, okay. Secondly, I would want you to reiterate the breakup of the capex that you mentioned for full year of FY2025.
Yeah. So our capex, restated capex is for Anjar TT. It is at 341 crore. For our pillow capacity at Ohio, it is 104 crore. For our transmission line for RE, it's 75 crore, and maintenance capex is 340 crore, totaling to 860.
Okay. So while given the fact that, and my rough estimate is that we will be broadly generating an operating cash flow of a similar amount. So are you suggesting that the debt balance that we have at this point of time would relatively be at the same level by the end of FY2025 as well?
In my opening remarks, because I have alluded to this, and that we will remain at the same kind of net debt level. But the ROCE will be better because because of the denominator effect, so we will be higher in ROCE percentage.
Understood. Second, sir, for the flooring side, while the installed capacity that we just quote here versus the maximum capacity that we can reach, that is around 27 million square meters. So any plans to improve from the current 18 to 27, given the fact that we are inching up on the utilization side?
So once we reach the nearer to 18 million square meter capacity utilization, we will then think about expanding it to that balance 27. We have on an average reached about 56% capacity utilization from that 18 million this year. Let's first reach about 80-85%, which we'll do in next 1.5 to 2 years, and then we will think about increasing the capacity.
Understood. Okay, sir. Thank you so much. I will join back the questions.
Thank you, Vikas.
Thank you. Participant who wish to ask a question may please press star and 1. Okay. Yes. The next question is from the line of Nilesh Jethani from Bank of India. Please go ahead.
Hi, good evening, and thanks for the opportunity. My first question was on the advanced textile. So when I see the QOQ number, there seems to be a small dip as far as the advanced textile numbers are concerned. Just wanted to understand what could be the main reasons for it.
Yeah, go ahead.
So I don't see a dip. There has been a lower increase in the advanced textile. Again, because of the Red Sea issue and the buyers were pushing that shipment slightly further. But we have been increasing, we have seen an increasing trend in quarter 4 as well, at about 12%, and overall we have increased by about 25% for the year. And from quarter 1 it's looking good, so it shouldn't be.
Our demand will be robust here. It was just an aberration of the Red Sea that the people pushed it a little back.
Yeah.
So at the current capacity, just wanted to understand what kind of potential revenues we can achieve in the advanced textile piece.
So we have reached about 40% capacity utilization in our Telangana. We are already at about 80% capacity utilization in Anjar. With the total capacity utilization 80-85%, we should touch a revenue about 1,000 crore, which should happen by in another 2 years, 2 to 2.5 years.
My second question was largely on the global business, the innovation piece which you report on the PPT, that has seen a sharp jump. So wanted to understand from global or export market perspective. One is of course the branded, which is helping us drive higher growth. But in general, what are we sensing on the ground level, the increased shelf space, etc., which could be one of the reasons for driving growth? But how to look at the growth rate sustaining going forward? How to look at it?
So here I'll just give you a little perspective here. So I think we are basically working on the quality of the share of shelf across. So it is not just a towel and a sheet that we sell in a private label. So as you rightly pointed out, our stake in the innovation grew by around over 67% this year. We actually are also looking at a licensed brands that grew. That actually grew by, we have around $140 million. Like Martha alone contributed around 13% to that top line. So, when I talk about the share of shelf and the growth that you're talking about, if I look at the landscapes across in America, you have the mass retailers, you have the clubs, you have the discounters, and the departmental stores. And here the discounters become a very key important aspect, which are growing at the rate of around 10 to 15% at the moment in this kind of a steady state market as well. So with Welspun's portfolio that we have across towel, sheets, bedding, rugs, carpet, and now pillows. We are setting up a facility in America for pillows as well, which actually has the same kind of a top line of 2.6 billion in America as like the towels is. So we actually are looking at that also growing very, very aggressively. So we feel very positive about the share of shelf. And let's not forget the hospitality segment. That again is a very big market for us. Right now we are at around $80 million and we are taking it to the next $100 million in the next 2 years.
Okay, got it. And on the B2B piece of home textile, what's happening on that? Will you help give me some color on the growth rate? I believe last year a lot of growth would have come via inventory filling also because during Christmas, etc., and that would have sustained. But how to look at this number, home textile B2B piece going forward?
So we actually have committed on a 10 to 12% growth next year as well, actually. And this is something that we will work towards. And that is, that's what we are very confident about. I mean, this year has been the highest number in our quarter 4 number, around 2,600. And we will take on the growth of annualized number of 10% here. So we are pretty confident on this. And it will spread across all the categories. If I can say, towels, we are the highest in the top line, and also the rugs. So definitely that actually we have a lot of potential to grow in the bedding business, which we are focusing on. Not only sheets, but in fashion bedding, pillows, and utility as well.
Okay. So the margins what we have reached in the home textile piece, like give and take 15%. How should one look at the growth? I believe towel and pillow are the two pieces of the effects which were coming in FY25 and 26. But apart from that, how to look at the margin profile of the home textile business going forward?
So home textile business overall would give a margin of about 15 to 15.5% from the current year 15%. So we would be, of course, be achieving slightly higher margin if we break it up into only B2B business, so B2B business is actually earning about 17% margin, which will go up by another 0.5 to 17.5. And then there is the domestic business, and then the home textile includes the domestic business as well as other advanced textile business. So if overall 15 to 15.5, export B2B 17.5.
Got it. And the flooring business will see its own operating leverage playing out, which will drive the growth over there.
Which will continue to grow. Sequentially, it will grow. Yes.
And one last question from my side. Sorry if I would have misheard, but you said the net debt level would remain constant going forward also. I thought we had plans to reduce net debt. So can you please clarify it?
Yes. So this year we couldn't achieve what we had advised for at about 1,100 crores. So we touched about 1,350. That's because of increase in our investment in working capital. Next year, because of higher capex, which will set the tone for higher growth in the near future, we are spending 860 crores in capex. Despite that and despite the payouts that we are planning, we should be at the same net debt. And we should touch a zero net debt by financial year 27.
So I think I must just add on here, the opportunity for India is immense in the categories that China is displacing. So this is all also emerging to that. And however, all said and done, our ROCE will maintain at the prudence of around 20%. And in all these projects that we are setting up, that's the ROCE that we are committing to.
Got it. That was helpful, and thank you so much.
Thank you.
Thank you. The next question is from line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, good evening, sir. Congrats on great numbers. Just on the guidance part, you're giving a 10 to 11% top line guidance, but if I'm trying to break the flooring would be growing at much more, say 20-25%. I think your flooring business target for next year is 1,400 crores or more than that. Then home textile is less. The growth rate becomes less than 8%. And if I'm seeing this year's number, you had a very strong volume growth across towels, bed linen, rugs. I think if I see the numbers, terry towel was 38% volume growth, bed linen was 35% volume growth, rugs was 45% volume growth. Even considering that FY23 last year was a decline, and so your growth rate was much higher on a very lower base. Even if I try to compare on a FY22 numbers, which were all-time high numbers on that number, your volume growth is still in double digit. So what I fail to understand is, in FY25, we have a capacity, but we are expecting a low single-digit volume growth. If I try to tally your guidance with the home textile volume growth.
So we will maintain a growth of around 10 to 12%, and that will be overall on the bigger base that you see around 9,800 crores that we closed this year. And I must tell you that, everything like the emerging businesses will continue to grow. They contributed around 34% to our top line, and that is the growth rate that we'll continue to see here. I think we are confident about this number, and we could better it. But I think the whole the business dynamics and the global dynamics that are prevailing. So we want to be cautiously optimistic, and it's better to be cautiously optimistic. And as you have seen this year as well, what we committed and what we delivered. So we'll continue to delight you.
Yeah, sure. So I understand you have given a conservative target, but the math itself says that obviously the growth numbers could be higher. Okay, second question on the 850 crores capex, what would be the maintenance capex number on that?
About 340 crores.
300 to 340 crores. Okay. And the third one, in the balance sheet on, there were some receivables from the government and some subsidy receivable. What was that number as on 31st March 24?
We don't give out those numbers separately. We can touch base separately, but it remains at the same level as last year. So overall,
Thank you. Thank you. Yeah.
Thank you. The next question is from Siddharth Bhattacharya from Autumn Investment and Infrastructure Limited. Please go ahead.
Hello, am I audible?
yes, Siddharth.
Yeah. So, just a couple of questions on the flooring business. So basically, correct me if I'm wrong, but we are seeing operating leverage sort of pick up now as more and more volumes get pushed through. So just wanted to understand what could be the peak EBITDA margins in this. That is my first question. And secondly, is there a additional margin that can be earned by a ideal mix of products within the segment? And what is that?
So, Siddharth, yes. The peak EBITDA margin, so we have told this earlier as well, so we should be at the company EBITDA range of 15 to 16% in flooring at the best operating leverage. And, giving a ideal mix, I mean, this is anybody's world. So I can't give you an ideal mix, but we are trying to reach the EBITDA level at the company level so that the overall EBITDA of the company goes up.
Okay. Okay. So let me ask you differently. What is the highest margin product, in your list of products for flooring?
That is difficult to be given, Siddharth.
Okay. 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 Got that. Got that. Okay. Thank you. Thank you so much for answering my question.
That was the last question. As there are no further questions, I would now like to hand the conference over to Mr. Dipali Goenka for closing remarks. Thank you.
The fabulous growth that we have been able to achieve in all our businesses in FY24 is a result of a continued focus on excellence and becoming a benchmark for our customers in terms of unparalleled, innovative and patented products, actionable insights and solutions we provide through our investments in technology and digitalization and our stellar services to our marquee customers. Our speed of innovation and that of meeting unmet needs of our consumers truly makes us an FMCG of textiles. Added to that, our focus on B2C and D2C through our global brands like Christie, Venhome and Martha, as well as domestic brands of Spaces and Welspun, has taken us much closer to our vision of Har Ghar Se Har Dil Tak Welspun. It's heartening to see our flooring business flourishing with consistent growth and profitability. At the same time, ESG is a way of life at Welspun, and our focus on doing business sustainably and responsibly would continue unabated, be it in renewable energy, fresh zero water usage, reducing carbon footprint, diversity, or in unparalleled governance practices. Our recent industry-leading score of 66 by DJSI reaffirms our leadership on ESG front. The certification by Great Place to Work, being among the top 100 corporates in all the key parameters, is also a prestigious achievement. We are committed towards our future growth targets for all our businesses, and with sustained growth profitably, we would continue to achieve higher ROCE and ROE, thereby creating substantial value for our investors and stakeholders. Thank you for your continued interest in Welspun Living. For any further queries, please feel free to connect with Salil and Sanjay.
Thank you, ladies and gentlemen. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.